See, if you look at, though there's been a slowdown in the economy, the general insurance business industry itself has grown. And we've also grown in this quarter compared to last financial year. So though we've grown about 6 or 7% growth rate, but still we've shown growth in terms of top line. So I think the industry itself is growing. Obviously, the main concern last year was the motor third-party pool, which to a certain extent has been now resolved by the regulator as of 31st March last year, when they dismantled the pool, and each of the insurers are now managing that motor third-party business. Provisioning for that also, last year we had to put aside substantial amounts of funds, or like the industry itself, and this year also a small amount has to be put aside, and next year. But going forward, we can see profitability in this business, and we have mentioned that the core business itself is showing profits other than this provision requirement, and by next year, with this provision requirement also, we show profit, quite a handsome profit.
Sam, also give us a color of a general insurance business, both in terms of market share and product mix.
In the private sector, we are about 8% market share, and we expect this to grow to about 9.5% in this financial year. And our main focus here is to change the mix of our business. We are primarily a motor and health insurer. We have been trying to focus more and more on commercial lines, being fire, engineering, liability businesses. And in the first quarter, we've been able to grow that segment of the business to about 20 or 30% and keep the motor business stable and flat.
Sam, how do you see the mutual fund industry flows shaping up over FY13 and FY14, and how do you see the AMCs as well as AUMs are likely to grow?
Yes, I think it's difficult for us to talk about FY14. FY13, our focus is just like we've grown in this quarter from about 75,000 crores AUM for the mutual fund to 80,000 crores. We expect that we would like to get and subject obviously to the market itself, we'd like to get ourselves back to about 100,000 crores AUM by the end of this financial year, which is achievable if the way we are progressing. I think one issue that we've missed talking about is our asset management stake sale to Nippon Life. This is going to happen in this month, the month of August. There we're getting about 1,450 crores for 26% stake in our asset management company. So Nippon Life have valued our asset management company at about 5,600 crores. And that 1,450 crores is entirely secondary, and will come to Reliance Capital and will go towards reducing debt for Reliance Capital.
Sam, what is the current breakup or ratio of debt versus equity funds under management for Reliance AMC?
Our equity portion has come down to about 34% from 38% last year. And the debt portion is the balance. Of the balance debt portion, about 30% is retail debt, where again our margins are fairly high, and the balance is institutional debt. So about 60% of our business, if you look at it, is about institutional business, retail business, and the balance is institutional. I think again, if you look at in terms of number of SIPs, we sell the highest number of SIPs, about 1.5 million SIPs we have in our books today. In terms of number of folios, we have about 7 million folios. So we have about 240 branches. So very, very retail mix of business right across the country, through large number of branches and through large number of customers.
Sam, how has the disbursements and credit growth been so far, and what is the outlook given the current slowdown, and also with sectors do you think would continue to contribute to the growth?
See, if you look at, we've grown slowly this quarter, about 6% growth rate only in terms of AUM for the commercial finance business, primarily because of the market conditions. We felt that it's more prudent to grow slowly but focus on NIMs. Our NIMs have gone up slightly. We expect it obviously to go above 5% NIMs by the end of this financial year. Profitability, that's what has grown also by about 25% or so to 66 crores. If you look at the mix of our business, we obviously are entirely secured business, focused on SME, loan against property, commercial vehicle, construction equipment, and a small portion in terms of the other portfolios. So here again, it's purely focused on asset creation, growth, and focus on businesses. And the number of customers we have is about 90,000 customers. In terms of our NPAs, we are at about 1.7%, which is again quite reasonable compared to the type of business we have. And in this, though it's gone up from 1.5 to 1.7%, that is due to 3 or 4 cases which we're resolving, and our NPA levels will come down to about 1.5 again in the next quarter.
All right, Sam, really appreciate your time, and good luck for coming quarters. Reliance Capital